Today, we're taking out our crystal ball and making some bold predictions on how the crypto industry is going to unfold in 2023. Is the bottom in? Will ETH flip Bitcoin? Are we nuking to zero or getting ready to do a 10 to 100x up? Let's talk about it. Get your popcorn out. Let's dive in. A great quote that I accidentally think I made up is everybody wants to buy the bottom, but the bottom happens when nobody wants to buy. For some reason, everybody kind of thinks that the bottom is a single number, but it's not. It's a range, right? So in 2017 to 2020, the bottom for Bitcoin was $4,000 to $7,000. If you bought anywhere in that range, then you did pretty good, right? And for ETH, in that same cycle, the bottom was like $90 to $300. If you bought anywhere in that range, you also did very well, right? So stop thinking it as a number. With that being said, I do think the bottom is behind us. We've already hit it. The bottom range for this current cycle, in my opinion, is for Ethereum, $950 to $1,500. For Bitcoin, $15,000 to around $21,000. If you buy anywhere in this range, I feel like in 5 years' time, you will be really happy that you did. I think the second half of 2022, people were so scared. There was so much fear that all of that peaked. I think the downside is behind us. The fear has peaked. And lately, I feel like inflation has also peaked, right? I'm no macro expert, so don't listen to me, but that's just my opinion. Next up, something that you guys probably didn't think I would talk about, Coinbase. Let's talk about Coinbase because I say this quite often to friends, maybe family. I think a lot of crypto traders or a lot of people in general would be better off if they bought Coinbase, the stock, and just held it for 2 years, right? Instead of trying to trade crypto. I say this because I think it's stupid undervalued at the moment. As I'm recording this, the Dogecoin market cap valuation is higher than Coinbase, the company that has been around since 2012, over a decade. These are the OGs, a company that is solid, has never had any crazy black swan events, and so many of us use, right? It's absolutely insane to me that that's even a thing. But here's the reason why. And shout out to my friend Leighton from Pool Together. He put this on Twitter and it kind of caught my attention because I was thinking the same thing. So I think Wall Street is going to get hit by surprise with Coinbase's earnings because Coinbase doesn't just make money from trading fees or spreads. They offer staking as a service, along with other things, of course, but they have over 6 million ETH that their users have staked with them. And every staked ETH reward, they take a portion of. And here Leighton guesstimates with the information that he has access to that right now, Coinbase's take rate daily is over $500,000 every day. But that's at current prices. And this is what Wall Street, I think, is discounting and ignoring, right? So if ETH gets back into the $2,000s or $3,000 range, then Coinbase's revenue from staking rewards is going to do a 2, 3, eventually 4x. And that's going to become like millions of dollars a day from this single income stream, right? So I think the price to earnings will become very, very attractive at some point. And in that meantime, I think the price is going to catch up. And I feel like there's an opportunity there. Personally, I don't own much Coinbase stock because I'm so heavily invested in Ethereum and crypto in general. But I definitely wouldn't mind picking some up. And I think there's some kind of opportunity there that could be pretty big that nobody really talks about. Let's talk about the ETH supply. So the merge happened about 4 months ago. And today, the ETH supply has shrunk since, right? Which is pretty big because a third of the year has gone by, or a third of a year has passed, and the supply is shrinking during a bear market, which just means there's not much activity right now. And this shrinking, this deflationary thing that's happening is from network activity. So the more people that are using Ethereum and layer 2s, the more ETH that gets burnt. So just imagine if not even in a bull market scenario, but somewhere in between, right? All that activity is going to be burning so much ETH that the supply is going to be going down and down and down. And I think this will turn a lot of heads because this 2023 is going to be a super pivotal year for ETH. And I say that because it's the first year where Ethereum is on proof of stake and it has the burn mechanism deployed. Those two things together, first time in history, in Ethereum history, that we're going to have a full year of that, right? So I think the fundamentals are going to eventually catch up. The ETH supply will be net deflationary all of 2023, which means it will shrink. And that inevitably will get a lot of people to turn their heads towards Ethereum. Okay, so will ETH flip Bitcoin? This is a tough one. This is a tough one because something super interesting has been happening this bear market. For the first time in history, the ETH to Bitcoin ratio has been going up, meaning Ethereum has outperformed or held its own against Bitcoin in a bear market for the first time ever. If you guys look on screen, 2017, 18, 19, and 20, Bitcoin greatly outperformed Ethereum. We could see we basically nuked to zero. And for the first time ever now in this bear market, the opposite is happening. And I think that's like a culmination of all the fundamentals that Ethereum has been shipping, like proof of stake, EIP 1559, et cetera, et cetera. I don't think that's going to stop. And while 2023 might not, probably most likely will not be the year where ETH flips Bitcoin, but I think it will be the setup year where it's probably going to make new highs, the ETH Bitcoin ratio. And that's just my take. Obviously anything could happen, but I do think that the fundamentals for Ethereum are just getting stronger by the day and not so much for Bitcoin. So next up we have gambling. No, it's not gambling, but this is one of my favorite categories in DeFi because it's been taking off and it's super fun to use. So perp exchanges are basically like, let's say you want to trade Ethereum, Bitcoin, any crypto you can think of, but you want to do it on leverage. So you could do 10x leverage, you could do 5x leverage, so you can even do 150x leverage, right? Whether you're going long or short. And a lot of people are enticed to, do that. And most people lose while doing that because it can be super degenerate and it's super risky. But there's a benefit because if somebody's losing, that means somebody else is winning. And that is the house. And that is these protocols that are offering perp trading. You're probably wondering, okay, that's great for them, but no, that's great for you because the trend in perp exchanges, DeFi perp exchanges, is that they're doing revenue sharing. So they're allowing you to be the house, whether it's through staking their native token and getting a portion of that revenue, or through just supplying liquidity to that main house pool and earning yield every time traders lose. And in the long run, traders historically always have lost. So this is probably a profitable and will remain a profitable kind of category to be in. So if you want exposure to this category at the moment, the platforms to watch, in my opinion, are Gains or G-Trade, GMX, Quenta, Synthetics, and then you also have MUX, MUX, which is interesting because it is an aggregator. So it will look into all of these other perp exchanges when you try to enter a trade and see which has the best spread and try to save you the most money. So I think that is different. And for that reason, I'm kind of keeping an eye on MUX as well. And then we have Lira, which is on-chain options. There is a lot of options protocols coming out, but I like Lira because it's in the synthetics kind of ecosystem. So those are the platforms to watch in that whole category. I think this is a pretty cool chart to look at. And this is the users of all these platforms combined, I think minus GNS over the last like 7 or 8 months, right? So this is a deep bear market, but you're seeing the users go up and to the right. So I think this is a great early indicator of how crazy this category will blow up and pop off during, when things get normal again and that inevitable bull run when that happens. So one very bullish thing for this category, in my opinion, is the fact that some of these apps offer the ability to speculate on things outside of crypto, such as stocks, commodities like silver, gold, oil, and these are non-crypto related things, which means even during a bear market or when there's low interest, these platforms can thrive, right? I think on GNS, the most traded, heavily traded asset class is Forex. So people are trading or speculating on currencies like the yen, euro, dollar, etc. This is huge because now there doesn't need to be interest in crypto, and these can be evergreen platforms that, thrive in any type of market, and we can kind of hopefully continue down this path and step away from the cyclical kind of routine that crypto is in. So the more off-chain things that we bring on-chain, the better. I don't really see anybody else talking about this, but vaulted NFTs, I think, will be pretty big. They might be the next wave. I'm not sold on it yet, but I'm super bullish because at the moment, the outside crowd that are not like, that don't live on the internet, they're not crypto native, look at NFTs as like these weird pictures that everybody's trading, and they don't get it. They don't understand it, right? They look at this image, they're like, okay, if I take a screenshot of this, do I own it too? Like, how does that work? It doesn't click for them. But when you bring in physical assets that are tied to a token, now they understand, okay, I can take as many pictures of this Rolex or of this Pokemon card or this sports memorabilia, but only the person with that token can redeem it from this secure vault and have it shipped to their house. So the token just makes trading to be way more efficient because you can easily, without a border, trade these across the world instantly. I think that's going to be a big unlock for the masses to kind of realize, oh, okay, now I understand NFTs, right? It's about the ownership, the verifiable ownership, and the removal of all the friction of the traditional internet railroads. Platforms to watch, in my opinion, in this category are Courtyard and Tangible. So definitely go check those out. It is definitely a super interesting category. Next up, we have one of Vitalik's favorite use cases for crypto, and that is prediction markets. And I can see why. It is super fun. I played around on Overtime XYZ and lost some money, doing sports betting, but I called it quits. But I can see the appeal, right? Like being able to plug in your wallet to any of these apps and start betting is super easy, right? It's easy and it's fun. But aside from that, it's something that is not crypto related, right? Like in a bear market or when there's not much crypto interest, this is another use case where sports fans can now use crypto. They can use the blockchain to make sports bets that they were already going to do outside of our world. So this is a huge umbrella. Obviously, sports betting is one of the bigger kind of markets or niches for this, but there's also general prediction markets. Like, for example, will Donald Trump win the next election? There is also crypto and stock prediction markets. One of my favorite ones to use is Thales, Thales. And essentially what you're doing on there is you're betting over or under. Will Bitcoin be over or under $25,000 by March 2023? So you bet, you choose a side and you win or lose, right? It is super easy, but also a great way to hedge. That's basically it for prediction markets. I think they will start popping up more and more, and it's a great and fun use case. Okay, finally, the time has come for ETH and Bitcoin prices 2023. What are my predictions? So while I don't think a V-shaped recovery is, going to happen, I do think a recovery will happen for sure in 2023. And we're maybe already kind of seeing that a little bit with this recent rally, but I'm gonna give a range. I'm not gonna give a specific number. I do think we deserve more sideways action. So much BS happened in 2022 that I don't think we just forget about it as an industry and just move on completely. But for ETH, I'm gonna go ahead and say $1,500 to $3,000. I know that's a big range, but with all the variables that we have being thrown at us, including macro, it's hard to put. But I think confidently say that we have bottomed on ETH and Bitcoin. So moving on, Bitcoin range for end of the year. My prediction is 22,000 to 30,000. Again, I know that is a wide range. I am 100% more bullish on this space than I have ever been, and that is kind of growing every week. And I'm not just saying that. I know we've been through so much, especially in 2022. If you're still here, if you're still learning, if you're still watching this entire video to the end, then I think you have a bright future ahead of you, because this is the next wave. And I'm super excited to keep, creating and sharing my experiences with you all. If you guys think that my predictions are great, or if you think I'm an idiot and have your own predictions that counter mine, I would love to hear them in the comments. So that is it for this video, and I will see you guys in the next one.